Good morning, everyone. Respected chairperson, distinguished reviewers, ladies and gentlemen. My name is Jaka from the Department of Management, Faculty of Economic and Business, DIAN NUSWANTORO University. Today, I would like to present my research entitled The Effect of Financial Determinants on Firm Value in Telecommunication Companies based on the Indonesia Stock Exchange. This study investigated 12 telecommunication companies listed on the IDX during 2019 until 2025, resulting in 84 panel observations. So, next slide. Firm value is important because it reflects investor the assessment of a company's performance, growth, prospects, and sustainability. The telecommunication industry was selected because it's a capital-intensive industry requiring continuous investment in network infrastructure, a spectrum, fiber optics, and data center. However, as shown in the figure, the average PPV fluctuated considerably during 2019 to 2025. This indicates the larger assets, higher probability, greater liquidity, or higher debt do not always increase firm value. Previous studies also reported inconsistent findings regarding the effect of profitability, leverage, firm size, liquidity, and growth on firm value. Therefore, this study aims to analyze whether these five financial determinants influence firm value in Indonesian telecommunication companies. And then slide 3. Objective and methods. The objective of this study is to examine both the partial and simultaneous effect on profitability, leverage, firm size, liquidity, and growth on firm value. The firm value is measured using PBV, while the independent variable are profitability using ROR, leverage using DARE, firm size using the natural logarithm of total assets, and then liquidity using the current ratio, and then growth using asset growth. This research applies a quantitative explanatory approach using panel data. The sample consists of 12 companies observed over 7 years, producing 84 observations. The fixed model was selected based on the Chow and Hausman tests. So for the next slide, the result is indicated two variables significant influence firm value. First, leverage measured by DARE has a positive and significant effect on PBV. This finding suggests that investors positively value debt when it used to finance productive investments such as network expansions, spectrum acquisitions, fiber optic infrastructure, data centers, and technology upgrades. This result supports the trade-off theory, which argues that debt increase from the value when the benefits exceeds the associated costs. Second, firm size has a negative and significant effect on firm value. This indicates that large assets do not ultimately increase market valuation because larger companies also higher depreciation expenses, maintenance costs, organizational complexity, and the risks of economies of scale. Meanwhile, profitability, liquidity, and growth do not have effect on firm value. This implies that investors do not rely solely on accounting profitability, liquidity, or asset growth when following telecommunication companies. Instead, investors appear to focus more on cash flow generations, productive asset utilizations, and investment efficiency. In addition, the wild tests confirm the all variables are strongly significant, while the adjusted R-squared of 91.37% indicates that the model explains most of the variation in firm value together with company-specific specific fixed effect. So, and then the next slide. This study concluded both theoretically and practically. Theoretically, the positive effect of leverage supports of the trade-off theory. While the insignificant effect of probability, liquidity, and growth indicate that investors evaluate the economic quality behind financial information rather than financial ratios alone. Particularly, managers should maintain on optimal leverage, improve asset utilizations, and ensure that investment projects generate sustainability revenue and operating cash flow. Investors should also evaluate debt utilization and asset productivity instead of relying only on accounting ratios. So for closing that inclusion, this study finds that leverage positively and significant effect from value, from self negatively and significantly effect on firm value. And then three, profitability, liquidity, and growth do not have effect on firm value. This finding suggests that the market values of productivity, debt utilization, and efficient asset management more than the size of asset or accounting performance alone. Thank you very much for your attention.